Are you tired of losing money? Understand, losing is part of the game and losing is inevitable. You're dealing with probability, so probably you can't do without losing. But some strategy have edge over the market and they can reduce your losing streak. I think today's video, which is over fair value gap trading strategy, have edge over the market. So if you're a trader who is struggling to find direction of the market, buyers, overall proper trend, this video is for you. And I will teach you the entire model based around fair value gap trading strategy. You will also learn top-down analysis. If this sounds good, stick around. Now let's begin. But before we start, we need to list the stages this strategy undergoes. Number one is bias, identification of bias. Second one is mapping of liquidity targets, and lastly is entry model. These are the three stages we'll be working with to get end product concerning this very strategy. If that sounds good, let's begin. But before we start, I want to give general review concerning this strategy. It's very important. In our early days, they told us that trend is our friend. We all accept because we have seen the implication of that for those of you who trade against the trend. How you lose your trade numerous times, countless time blowing accounts, but earlier the better, you stay in the right direction. In the whole context of this strategy, this is a modification from ICT concept on trend continuation pattern. But does the effectiveness of this have edge in what we have today? Yes, because trend is your friend. And remember, market moves in two directions. That is two phases. Market moves in two phases. Market moves from internal range liquidity to external range liquidity, or from external range liquidity to internal range liquidity. These are the cycles that the market undergo on daily basis, weekly, monthly, yearly, etc. Now, for the fact that we are dealing with trend, we need to see market making high highs and high low. That's when this strategy will be effective for you. As you guys can see on this diagram, we have lower highs and higher low, and we have higher high. This higher high left us with inefficiency in a price. That is called fair value gap. And once you find such move in the market, all eyes will be on that zone. That is 50% discount of the total movement that happens. Because what happens here is only the buyers are interested. The sellers don't even attempt to appear. So it's unfair to have such move. So left units, institutions, big boys, hedge funds, this zone will be their point of interest. That's why ICT talk more of fair value gap. So we have defined our bias. You understand now? Our bias has been defined. This is our point of interest. Remember, this happens in daily time frame. I hope this is clear. Now, next thing I need to see is to see market drop back into the zone. Once market drop back into the zone on 1 hour time frame, we look for reversal indication. So now markets drops back into the zone as we have defined our bias. So as the market drop back into this very fair value gap, we need to see reversal indication on same 1 hour time frame. So on 1 hour time frame, we want to see market push up, that is created lower highs, maybe another higher low. Along the line, if the market sweep this recent higher low, is called change of character. So let's change the color to green. So this change of character have got our attention more that this fair value gap may hold this price drop. So we need to mark it out. We have change of character here. This market structure shift. It doesn't end there, because if you have fair value gap in this very lower high, you can still use it as your entry model. But I want you to understand that no matter how good any change of character is, market can sweep it up, continue going down or up. So this may be a liquidity grab. This may be sweep on liquidity and market keep on dropping. So that's why you need to refine it more. So we need to see another stage of price whereby price will create another higher low and higher high. So here becomes change of character. I hope this is clear. On that change of character, we move into stage 2 whereby we mark out our liquidity to sweep. That makes it more mechanical. I hope this is clear. So now markets have changed character, break off a structure. We're in stage of entry models now. We mark out this recent higher low waiting for sweep. So that becomes our entry model. So now we move down. We want to see the price drop back into the zone, sweep this lower high. Remember, this happens in 1 hour time frame. So once markets sweep this recent lower high, we move down to 5 minutes time frame. That 5 minutes time frame is where we find another change of character. So we want to see maybe price created a lower high during that move and higher low, and suddenly market sweep the recent lower high. As the market sweep this recent lower high in 5 minutes time frame, maybe there will be other block here. There may be fair value gap or breaker block, anyone you want to use. But for this teaching, I'll use fair value gap, or I'll use order flow. Let me put it that way, because market will always give you opportunity, because the entry you see today is not what you see tomorrow. It may differ. What matters is which one works best for you. So I'll use this order flow, which everybody knows has breaker block. So the last selling pressure before the change of character in 5 minutes time frame is what I will use. So let me put it there so that everybody will understand. So now here becomes my target. The 1 hour higher low becomes our target. This is target for scalper, that is day trader. This is where you target as your target for the day. Then swing traders, you may target this all-time high, this very daily high as your target. Do you understand? So now you set your pending order inside this breaker block and target this high here for day traders. Then if you're a swing trader or you can hold more, then you hold to this very last zone, which is our daily time frame. I hope this is clear. So the same thing applicable in downtrend. So let's reverse this chart and give quick summary. So as you can see, so let's change this color to red. So now reverse is the case, but let's take for instance, we're in downtrend. Market created a fair value gap on daily time frame. So we want to see the market goes back into the fair value gap, show us reversal indication on 1 hour time frame, breaking the last higher low. Once market break it out and give us another higher low, break it off, then we'll mark the recent lower high we have. If the market invaded it, that is, if market read it, we move to 5 minutes time frame to find reversal indication. Once we find reversal indication, we place our target in the fair value gap or order block on 5 minutes time frame. So the 5 minutes time frame will also show us change of character. Then if there's any fair value gap or order block inside that zone, that's where we place our target. We target the recent higher low of the 1 hour time frame, then target the overall trend based on 1 hour daily high or low. So we target the daily low. This is the most recent low we have. So hope this is clear. So let me move to live example to show you how everything works. I hope this is clear. If you have question, you can still ask, but as we are showing example, you will understand it better. So let's start with this example. This is AUD USD in daily time frame. Some people will say you said uptrend. Technically, this very movement you see here, this is uptrend. Reason, market sweep liquidity here. This is lower low, get failed to draw further. This attempt here pushes it up. This attempt pushes it up. So it's called liquidity grab. Then market continue make high highs, high low. So on the process, it makes a fair value, give us a fair value gap. So that's just in my easy example. Don't get confused. So here is my fair value gap. Now we're waiting for a price to drop into the zone. Do you understand? So the only thing we look for now is price to drop into the zone. Once price drop into the zone, show us change of character in 1 hour time frame. Print another break of structure. We mark this zone here. Wait for liquidity sweep. Then move to 5 minutes to find another change of character. Here becomes our entry model. Target. Do you understand? So now that's what we'll be looking for. Let's drop the price. As you can see, price is now in the fair value gap. This is fair value gap we mark. We have define our bias. The second stage is now to move to 1 hour time frame to map out liquidity to sweep during kill zones. You understand? So we drop down to 1 hour time frame to look for market structure shift. Okay, because you can look at the left top corner of the screen, we are moving to 1 hour time frame. Now that you're on 1 hour time frame, let's look for market structure shifts. Beautiful. So as it is now, from the touch of this fair value gap here, I'll be looking for recent lower highs, marking it out, waiting for days of break. That is how it will break this very, so this is the recent lower high I have. So wait calmly, patiently for change of character to happen. Technically, we have beautiful change of character, beautiful one. So then the next thing I'm looking for is to find market create a break of structure. Once market break off a structure, I now mark the zone. Like I told you, if you mark the zone, then wait for liquidity to sweep here because your target and overall target is above there. So that's what we'll be looking for. Let's roll the candle more to see if market got to do that. Beautiful, beautiful. So we have sweep here, this sweep. So this sweep here, you understand? So now we want to see market take up this low, you understand? So this is the low we'll be looking for now. Let's see. Beautiful. As market have taken up that low, we move to 5 minutes time frame for market structure shifts. You understand? So let's move to 5 minutes. So we have red here. We have a red in 5 minutes. Another beautiful red down there. Now this is another block. Market change character. This one and character here. We have other block. This is other block. To use this as our entry. Set our targets. Is your targets. 1 hour target. So we now wait for price to drop into the zone. So you can see market have picked the zone, pick it up, then see how it delivers to 1 hour high. So that's it. So I'll give you another example, but that should be a bonus example. You need to go and backtest this, check it for yourself. Don't tell me it's not working, because you can see the whole process we undergo before we can get this very huge risk to reward. So that's how to do it. If I give another example, that's actually a bonus example, but from the explanation and the way we get this very setup, I think it's okay for anyone who wants to learn. So let me give you another example, then I will close this video. So here's the last example I'll give. This leads to live example. This is one of the trade I'm watching. I'm a dynamic trader. I don't have a specific strategy that I'm trading. So this is one of the trade I'm watching. Euro USD. So there's a fair value gap here. Let me start afresh. There's a fair value gap here. Remember, we're in downtrend. Market break off this zone, this structure. So a break off structure here, pulls back, a break off a structure again. So we have a fair value gap. This is a very nice fair value gap here. It's a very nice fair value gap. So now we're waiting for the market to come inside the zone. So I need to do everything fast as I can. This video has taken longer time. So let's go to 1 hour time frame to see change of character. So as you can see, markets, this is 1 hour time frame. Market have moved into this fair value gap. As the market move into the fair value gap, what are we looking for? We are looking for change of character. Remember, this trade will lead to live example because this is Euro USD. You see on live, I'll be watching this trade. So the only thing you need to do for yourself is just to mark the zone exactly the same way I'll do it. Then I'll give you what you'll be looking for. Maybe in a couple of days to come, the setup may play out. So now looking very close, this is the last lower high we have here, the visible lower high we have here. So market sweep liquidity here is not change of character. Considering here as change of character, we make this setup invalid. So now we patiently wait for the market to break off this zone, that is change of character. Then we have another pullback. Then we have a break off structure. After that break off structure, we need to see market show us, we need to mark the zone as our liquidity zone to sweep. So once market read of this lower high, so once the market read of this lower high here, if market read it off, then we move to 5 minutes time frame to find change of character. And if market break this current lower high. Our entries will be in this fair value gap or order flow. Then we take it down to this target. Do you understand? So this is what we'll be looking for in Euro USD. Currently, this is a live example. So you can mark it the way I show you now. Watch as the setup will play out. Remember, I'm not giving more example. This video has become super long. So don't forget to subscribe, follow our forex journey. Very soon I will unveil my Telegram group for you, for free signal for everybody that show his support to this channel. Thank you. God bless you. See you soon. Bye for now. Remember to backtest, please. Remember to backtest everything I share with you. The more you backtest, the more you see things to comment on, question to ask me if you wish to learn from me. But very important, always backtest, forward test anything you learn from anybody, because this is game of money, not just play. You understand? So see you soon. Bye for now.